2025 has been a wild year without a doubt. Despite, or maybe because of that, there have been some really huge winners for sure. Hold on to your seatbelts, folks. This is going to be a good one. The beginning of the year opened as most years do, with hope that it was going to be okay. However, this time around, with an impending change of guard in the US, there was more than just simple pessimism, that's for sure. Whether you love or hate Donald Trump, it was widely agreed on that he was going to shake things up. And oh boy, oh boy, did he ever. Trump was and still is the major catalyst of the year. His overall tariff approach to the international stage has caused a wee bit of chaos, and for many countries, including, of course, Canada, paved a road towards a possible recession. Trump's pro crypto stance has helped to bolster the crypto sector, and his firmness on defense and the NATO member GDP component has caused a little bit of a bullwave within the defense and aerospace sector. Of course, it does sound like it's all the Trump show, but Trump is not the only catalyst in town. We also have had growing tension in the Middle East with a potential war between Israel and Iran that has, well, in the last week, caused a surge in the energy sector that could be a story of the second half of the year for sure. In Canada, we have a new old government with a new face and a promise to build infrastructure, which thus far may be a very good thing for Canadian infrastructure builders. And we can see some strength already in a few of those stocks. One last big factor driving this year is, it's all of the uncertainty all on its own. When times get a little hard to predict, many investors move more into their safer bets like gold. Gold has had a great year thus far, and it is expected to be a player for the remainder of the year and perhaps into next year too. With all of that, we do have to wonder who is coming out on top, and maybe more importantly, is it too late to ride some of those some of these stocks higher? A sub to the channel is your express pass to higher levels of future content. In making this list, I added a rather unusual qualifier in that I was only going to take the top stock from any one specific industry. Otherwise, this video would be me saying, "Hey, top industry, you win everything. Thank you for watching." With with that being said, I also only looked at stocks worth more than $10 to avoid the penny or penny adjacent stocks. I also wanted a return of equity over 10%. You guys know I love my ROEs for sure. Today's list, of course, is going to be sorted by their year-to-date total returns. So without any further ado, let's do this. Kicking off our list at number 5 is Finning International. They get a ticker of FTT. This I don't think we've ever looked at Finning before. They are based out of Vancouver, and they provide Caterpillar equipment parts and services to mining, construction, and energy industries across Canada, South America, and also the United Kingdom. At the time of recording, their price was coming in at $54.71. They've got a pretty healthy market cap of 7.36 billion. Their beta, a little on the volatile side, 1.53. Earnings per share, 3.55. That price to earnings ratio, 15.41. Looking at their return on equity, that's coming in at 18.13%. Those return on assets, 6.51%. Debt to equity ratio, 100.75%. Okay, let's take a look at their dividend. They've got a yield of 2.21%, quarterly dividend of 30.2 cents per share. Payout ratio on that, very sustainable at 30.99%. When we look at their return on investments, and today we're going to see some pretty good numbers. Their 3-year return on investment, 100.99%. Factor in those dividends, total return, 112.42%. On their 1-year, that return on investment, 39.92%. Total return after we add in the dividends, 42.81%. And of course, I said we're sorting these guys by year to date. So that year to date total return on this stock, 44.54%. That's not too shabby, and they're only going to get better from here. So buckle up, buckle up. I know I said that at the top, but do it again, do it again. All right, their 3-year annualized 28.55%. With a booming mining and construction backlog, and with huge demand growing in their South American operations, they they could very well be poised to move up on this list before the year is done. So there's potential there. Definitely big potential. Okay, let's move on over to number 4, and we've got Farron Technology Group, ticker FTG. Yes, we've seen these guys before. They're based out of Toronto, and they provide high reliability printed circuit boards and cockpit display solutions for aerospace and defense industries globally. At the time of recording, their price coming in at $11 even. They've got a market cap of 276.91 million. Their beta coming in at 1.24, earnings per share 0.54. Their price to earnings ratio 20.37. Looking at their return on equity, that's coming in at 18%. Return on assets coming in at 7.87%. And their debt to equity ratio coming in at 52.73%. When it comes to their dividend, they don't have a dividend. So they are entirely growth focused. So their 3-year, let's look at their return. Their 3-year return on investment, 439.22%. Holy banana bread. It's not bad. On that 1-year return on investment, 109.52%. And of course, year to date, return on investment, this is what I'm sorting it by, 50.07%. Nice. That 3-year annualized, also really high, 75.36%. We have seen Farron popping up in a few lists lately, and that's well, it's not a coincidence. They have strong projected earnings growth of roughly 35% per year over the next few years. And with the growing demand in aerospace technologies, hitting higher cash flows is not going to be difficult. I am very optimistic about this one for sure. Okay, looking at number 3, we have TerraVest Industries. They have a ticker of TVK. They're based out of Vegreville, Alberta, and they provide industrial equipment solutions, including pressure vessels and fuel storage tanks to, well, the energy, agricultural, and transportation sectors. At the time of recording, their price was coming in at $167.77. They got a market cap of 3.61 billion. That beta pretty less volatile than what we've seen so far, 0.68. Earnings per share sitting at 3.98. That price to earnings ratio of 42.15. Their return on equity at 24.68%, and that's what we're talking about. I love seeing the ROE above 20. That return on assets of 5.92%. Now they do have a little bit of debt. So their debt to equity ratio, that's coming in at 243.30%. Let's take a look at their dividend. They have a yield of 0.42%. It's a quarterly dividend of 17.5 cents per share. Payout ratio on that, 16.37%. Now, when it comes to returns, the last one got a holy banana bread for that return. I should have saved it for this one. Look at this 3-year return on investment, 600.50%. Factoring in those dividends, total return, 607.70%. On their 1-year return on investment, 142.06%. Adding in the dividends, total return 143.03%. On that year to date total return, that's looking nice, 50.48%. 3-year annualized, oh boy, this is a good one too, 91.99%. They did experience rapid growth in their revenue and earnings in 2024, and this really has positioned them well for continued expansion into those niche industrial markets. So let's see what they do this year. I can't wait. All right, in our almost top spot at number 2, we have Pine Tree Capital, ticker of PNP, and we've seen these guys before as well. They are based out of Toronto, and they provide venture capital investments focused mostly on early stage companies in technology, clean energy, and resource exploration. So at the time of recording, their price coming in at $18.85, and they got a market cap of 176.94 million. Their beta 0.54. So that makes them about half as volatile as the market average. Earnings per share 3.40. Price to earnings ratio coming in at 5.54. Very low. And that's where we saw them last. I think we did a video on low price to earnings ratio, and they were definitely in there. Return on equity, nice number, 44.03%. Return on assets, 27.50%. So these return numbers, absolutely stunning. Looking at their debt to equity ratio, 0.21%. That's not too shabby at all. And this one also has no dividend. So let's jump into those returns. 3-year return on investment, 490.91%. 1-year return on investment, 211.57%. And they're year to date. Their year to date return on investment, look at this nice number, 70.90%. Oh boy. Their 3-year annualized, 80.79%. As I said, this is another one that we have seen recently. They are definitely a little on the undervalued side with some pretty solid fundamentals. And if they back the right horse, because we're talking venture capital, it could pay off big time for their overall business. All right, in our top spot at number 1, and this one should not come as a surprise. It's London Gold Incorporated, ticker LUG. They are based out of Vancouver, and they operate a very high-grade gold project in Ecuador that has been, they've been doing very well, to say the least. Oh boy. At the time of recording, their price coming in at $73.87, and they've got a nice, very nice market cap, 17.82 billion. Their beta, a little less volatile than the market average, 0.86. Earnings per share, 3.04. That price to earnings ratio, 24.30. Their return on equity, another nice one, 47.31%. Return on assets, 29.78%. Oh boy. And their debt to equity ratio, it is 0. They got no debt, lots of money, flush with cash. Oh boy. I'm liking this one. Looking at their dividend, they have a yield of 2.341%. That's a quarterly dividend of 61.9 cents per share. Payout ratio on that, nice, very sustainable, 36.04%. Now, I've got to mention this. Coming up towards the end of June, they've got some special dividends dropping. It may be a very good month for their shareholders indeed. They got a lot of money. They're giving it back. What can I say? Switching to their returns, their 3-year return on investment, 654.55%. Factor in the dividends, total return, 687.77%. Holy banana bread. Yeah, this one gets it. This one deserves it for sure. Looking at that 1-year return on investment, another impressive number, 287.36%. Adding in the dividends, total return, 298.78%. Year to date. So we're talking 6 months. So the last 6 months, their year-to-date total return, 142.21%. That's good enough to take the cake in any market, as far as I'm concerned. 3-year annualized, oh boy, 98.98%. Couldn't you have just got a little higher? I would have loved to have seen 100, but this is pretty as close as you're going to get. This is that stock that has been blowing up in the 0 to 100K challenge. And I think it is easy to see why. In a strong gold price environment with very robust production in their Ecuador operations, they are currently enjoying a perfect money-making storm. If this continues as expected, we could see additional special dividends down the line. These are some awesome stocks for sure, and there were other gold and mining companies that easily could have taken spots 2 to 5. That is a sector that is absolutely on fire for sure. If I missed your favorite moneymaker of 2025, be sure to drop those stocks below in the comments, as I'd love to check them out. Of course, if you're interested in any of these stocks we're looking at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on Blossom, and I I'll see you in the next video.